Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about a stock in the EMS theme, which is Sirma SGS. In the recent budget, that is 2025, the government emphasized the EMS sector. They have reduced import duties on the components which are used by these industries, and they want to promote further investments in the form of PLI schemes in this sector. So this is going to be a big theme for the next decade, and this company operates in that theme. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. So before we begin the discussion of Sirma SGS, here is a small disclaimer. This is not a stock recommendation. We are discussing only for educational purposes. This stock is chosen by the audience from the Telegram poll. So I have not chosen this stock for this video. I am a SEBI Registered Research Analyst, and I or my clients may have positions in the stock. My view can change based on further developments in the company and the results. And this is a short form of video. This is not a full-fledged deep dive video. So I'll be covering only the important points in this video. This will be the flow of our discussion. We'll talk about the business model in brief. We'll look at the stock performance in the last few years. We'll see the financial performance of the company. We'll discuss why the stock has been in consolidation mode from the day of listing. We'll look at the outlook of the management going forward. We'll talk about the valuations, the risks in this business, and then form an overall view on the stock. So this company was started in 2004. It is an electronics manufacturing services company. It is an integrated company, so if you give them a concept or you give them an idea, they come up with a product design, they do research, they do develop the product, they give you prototypes, they manufacture it, then they also take the maintenance of those products. They work with diverse industries like auto, FMCG, etc. And they have 12 manufacturing facilities in India. Recently, they have invested in a medtech company based in Pune. They have 3 R&D facilities. They have more than 270 customers across the globe, and they supply goods to more than 20 countries. These are their products. They manufacture printed circuit boards, RFIDs, which are used in radars, electromagnetic products, motherboards, memory products like USB drives. The company has reputed customers like in the auto sector, they work with TVS Motors. In FMCG, they work with A.O. Smith India, Eureka Forbes, Hindustan Lever. They have taken 51% stake in a medtech company called Johari Digital Healthcare Limited in Pune. And they believe that this medical device manufacturing business can do very well in the next 3 years. These are the competitors of this company. They have both national as well as international competitors operating in India. Flextronics, Jabil, Dixon, Cyient, Foxconn. So they compete with the top EMS manufacturers of the world. If you look at the revenue split in terms of industry, they get about 40% revenue from the consumer goods, about 6% from healthcare, which will further go up with this new acquisition. Industrials constitute about 25%, railways and IT constitute about 6%, and auto around 20%. From India, they get a revenue of about 70%, and from US 6%. Germany, they get a revenue about 15%, and rest of the world 10%. So their major chunk of revenue is from India itself. Company came with an IPO at about 220 rupees, and the listing was not that great. If you see at the time of listing itself, it was trading at somewhere around 250 to 300 range. So it was a decent listing, but not a blockbuster one. But later, when the results came, the stock gave a massive rally and hit a high of almost 705 rupees. From then onwards, we saw a sharp correction towards 377, and now the stock is consolidating at somewhere around 500 rupees. So this zone of 377 to 400 could be a good support for this stock in the short term. In terms of revenue, they have shown a steady growth in revenue. They did about 886 crores in FY21, which has risen to almost 5 times in the trailing 12 months to almost 4,000 crores. EBITDA wise also, they have shown a good growth. They did a EBITDA of around 100 crores in FY21-22, which increased to almost 268 crores in the trailing 12 months. So if you observe that the profits have not grown in proportion with the revenue, this is because we have seen a margin decline in EBITDA. They did an EBITDA of about 11% earlier, which has gone down to 6 to 7% now, but the company is hopeful that they will further increase this EBITDA to 9% in the long run by changing the product mix. Return ratios are not that impressive, but the company aims to do an ROC of about 15% by the next year and gradually increase to 20% in the long run. Promoter holding is just about 46%, so if they want further fresh fundraisers, the promoters have to further compromise their holding. Inventory management is key in this business. They have high investment in their working capital, where inventory days are seen at almost about 5 months and debtor days of 3 to 4 months. So managing working capital well is very important in this business. Cash flow wise, the operating cash flows have not been positive. That is why the debt of the company is increasing every year. And right now, if we exclude the cash balances, they have a net debt of around 272 crores, which is well under control. What led to the consolidation or slight fall in the stock in the recent few months is the margin did not see improvement. So market was disappointed with the reduction in margins. Valuation wise, at one point of time, the stock was getting more than 100 times earnings, which are not sustainable. So this was the main reason why the stock got derated. and the market sentiment also has not been that great. So when the market sentiment is bad, the companies tend to get lower multiples than in a bull market. So before we move forward, if you're not a part of our Telegram channel, please do join today by searching my name in the Telegram, or you can click on the link in the description button so that you join the correct Telegram channel. It's a free channel, and every day morning I post my views on the market and share some good portfolio allocation insights which will increase your returns. Moving forward, the growth order book is 5,300 crores, which is quite impressive, and the company is aiming for a growth of about 40 to 45% in the FY25. EBITDA wise, they plan to do at around 300 to 320 crores in this year, and EBITDA margin would stay about 7%. In the next year, the company aims to grow at about 30-35%. Exact guidance would be given at the end of Q4, and EBITDA will further improve from 7% in the next year is what the company is saying. So the company seems very bullish about their growth in the next 2 to 3 years. In terms of margin, as the product mix increases or changes, the margin will further increase, and they've onboarded new auto clients recently which will start yielding good amount of revenue in the next 2 years. Return ratios will improve to 20%. They have invested in a new design center in Pune. This will start yielding good growth in the medtech business. They will also get PLI subsidies in the medtech business. Main revenue from the medtech business will start flowing from FY26. And this year, so far in the 9 months, they have done a capex of about 180 crores. So growth wise, the company has very good prospects in the next 2-3 years. Now let's look at the valuations which determine at what price it is trading now. So valuation wise, at one point of time, the stock went as high as almost 100 times earnings, and right now it is trading at around 67. So all the companies, if you see their peers, they generally in the EMS sector, because of the high growth in the sector, all the companies trade at a very high valuation, and same is the case for Sirma SGS. So the company trades at 67 times earnings, price to book of almost 6 times, and market cap to sales of 2.3x. So valuation wise, it is not very attractive, but this is what the industry norm is right now for this industry. So it depends on us as investors to decide our style of investing and see whether it suits us as a value investor at these valuations. Now, what could be the risk of investing in this business? If there is a slowdown in this industry, that could impact the business. Their end customers, if they witness a slowdown, that will impact the business of this company. Competition is increasing day by day within India as well as abroad. Technology risk is a major risk, as they have to keep doing research and updating the technologies. Otherwise, they'll not get orders from their customers. Valuation wise, it is richly priced. So if they miss performance as per their guidance, then the stock could have a de-rating. Working capital is very important for this business, and they have to further improve the efficiency at which they are maintaining the working capital. So now that you've understood the business model of the company, the growth prospects, the valuations, the financial parameters, the risks of investing, what is an overall view on the stock? So these kinds of investments suit for investors which call themselves as aggressive investors, because these are not companies which are real value buying opportunities. These are growth companies which trade at high valuations, and they keep trading at such high valuations till this theme is in flavor and till these companies continue to perform. So if you are somebody like that, then gradual accumulation of this stock over a period of time could be a strategy which you can adopt. But if you have already invested in the stock and holding from the lower levels, you should continue to hold, because the company is showing clear signs of growth for the next 2 years at least. So that's about Sirma SGS. I hope you like the crisp analysis. If you like it, hit the like button, subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.